So I'll wait a couple seconds after. Hey everybody, how you doing? This is Josh. Today I've got the privilege of having my buddy Rocco Blase on. I just wanted to talk to you guys today about the biggest topic, kind of everyone's throwing around right now is mortgages, loans, and everything that's going on. How you doing today, buddy?
Excellent. How you doing?
I'm doing great, man. Doing great.
Good. Good.
So I just wanted to kind of pick your brain, buddy. Like, you've been kind of doing this business for a few years,
20.
and yeah, 20-ish, and you've also now stepped into a different role. What is it you're doing right now?
Managing director at SunWest, and what I'm doing, I'm doing a lot of things behind the scenes that people don't necessarily see, but I'm working with brokers and working with the different personalities, the branch managers, the processors, loan officers, and getting feedback from them to continue to improve our system. So I have a lot of candid conversations with people, and just talking to them about, I ask them what's going on with you and what's going on with your business, and what are you seeing, and everybody's got their own little version of what's going on, but it's one thing that's pretty consistent is everybody's busy. They might not be busy bringing new business in, but they're busy communicating. It just depends and where they're at in their wheelhouse. If they're doing refinances are still kicking through. Purchases have slowed down a little bit just because everybody's getting used to the new normal. So, but as I see that go, there's just been so many quick changes that have been made in the industry to make sure that we can keep this whole thing moving through. So, that's been a huge benefit.
Yeah, totally. So I just wanted to reflect with you, like, so obviously we saw a lot of things happen and change once the government put a really kind of a hold on the everything in general. So can you talk about a little bit like what happened on the mortgage side when this happened? Like did you start see happening from a lender standpoint?
Well, the first thing that happened was the interest rates, they just dropped like a rock, and the refi boom started, right? So the reason that was happening was because the government started buying mortgage-backed securities. So it just makes the interest rates go down and down and down and compresses them. So with them having that huge flow of buying mortgage-backed securities more than they have in the past, well, a long while back, they did the same thing in the '08 crisis. But the thing is they overbought, which started having a reverse effect. So there was a lot of lenders do what they call servicing. So they service a loan, and when they buy those servicing rights and or create to originate that loan, there's an expected time period that they're going to hold that loan and have profitability off it. Well, the thing is now what we have is what we call runoff. So when the interest rates drop that quick, lenders can't react quick enough to protect their servicing portfolio is what we call it. So it causes an actual bad thing. It's good for the consumer, but it's bad for the institution that holds that servicing, because now all of a sudden the value of their servicing portfolio goes down. It causes a lot of havoc, and it can tank the mortgage industry. So what happened was the government slowed down their buying, and which started leveling off the interest rates. But we had a lot of volatility where interest rates, or I should say the mortgage-backed securities market, was swinging, just up and down, just within hours. And it's really hard to explain to the layman of exactly what's going on. I've learned so much as I've gone along, but those huge swings cause just fits for lenders, because they don't know what the profitability or the loss is going to be on any singular loan, I guess is the best way to put it. So what they end up doing is they end up pricing in a risk. So now the interest rates are starting to rise up a bit. They're still all-time lows, but they're not in, they were headed for the twos. And now we're still in the threes, which is great.
Yeah.
but it's one of those things where it had to level off. It's leveled off. So now the other thing that a lot of lenders are dealing with is they have a backlog of loans because so many loans came in. Like in a matter of a week, it was just an explosion of loans, and nobody was ready for what happened. The other thing that occurred was with mortgage-backed securities and with the let's talk about forbearance. So forbearance is a huge thing. Forbearance, we keep echoing, it's not forgiveness. But the thing is so many folks are in the position where they don't have a job, or their job's on hold. They're not being paid. They're waiting for the paycheck assistance to come through. They're waiting for the stimulus check to come through. They're waiting for something. So they hear, okay, the government said that I can waive my payment. Well, you can push it further down the road. You're not completely waiving it. So people are doing that, which also causes a fit with a servicer, because the servicer now, they're responsible to make that payment on that note. So with that happening, like I said, it just causes a lot of uncertainty in the market. So investors that once were interested in investing in mortgage-backed securities, they're like, no, thanks. I don't want to have something that's basically going to be a volatile. It's not an asset anymore. Now it's become a liability.
Right.
So there's a lot of moving parts when all these, it's like a chain reaction that continues to happen.
Gotcha. I like it. So obviously, we talked about forbearance. Also, one thing that did happen too is when COVID hit and the government shut down, they started reeling back all these other programs too. Can you talk a little bit about the programs that were there and some of the things that changed when they locked everything down? Because I know they made things super tight out of nowhere. Well, it shouldn't be out of nowhere, but
Well, the misnomer is that it's the government that pulled the products back. It's not the government. It's the market itself. It's the mortgage companies that were comfortable. Like I said, everything's based off of risk. So they started looking at lower credit scores, and some lenders are saying, nope, we're not doing that. That's too much of a risk. Looking at the loan to value, the months of reserves, where traditionally, let's just use an FHA, for example, it's 3.5% down. So with us, we can still go down to a 500 credit score, where other lenders aren't. There's still a few that are still going down into lower scores. But what's happening is, like I said, everybody's looking at the risk and they're saying to themselves, okay, what's the best lane for me to stay in? And it becomes very vanilla. So, okay, I want to do 20% down, or if I'm going to do an FHA, I want someone that has it's all over the board. It could be a 700 credit score. It could be a 640 credit score. 640 seems like the popular number. 640 is typically where most companies are backing off to. And that's, like I said, that's the industry backing off, not the government. FHA still offers, no credit score. VA still offers, low credit scores. USDA, Fannie Mae, Freddie Mac, all those, the structure, the foundation of the guidelines are still in place. It's how the lenders are interpreting them, and they're interpreting them for risk.
Gotcha.
So it just depends on, with our company, we've been around for 40 years. We have 40 years of servicing. We know what will perform as an asset, being the credit scores, and we've deciphered that sometimes credit score there's no significance to what the credit score is. It's about the profile of the actual borrower. So like I said, it's a lot to digest. The thing is, you have big companies that have grown just to huge amounts of servicing in a short period of time, but they don't have years of experience to really know exactly what's going on. So there's things called margin calls happening. There's all these big words that are happening in the industry that are literally crushing lenders in one day. Wow. And so they have, like I said, they have to back off, and they have to retreat to something that is more just safe, right? They have to go with what they feel is safe. And it's an unfortunate thing, but until we get to where people are going back to work, there's not people filing for unemployment, they're filing for the forbearance, they're just kicking the can down the road basically with their payment.
Right.
Because with the forbearance, I'll go a little bit, if you want me to go into it a little bit of.
I do. Yeah, if you can,
Okay.
I'd love to.
So I interviewed our servicing manager the other day, and I asked him, I said, hey, what can I tell people? What's the reality? How does it work? So a customer calls up us, a servicer, and says, I've been affected by COVID-19. Instantly, you qualify for forbearance. There's no documentation. Okay. So
Gotcha.
you go into a forbearance, you don't have to make your payment, your principal, interest, taxes, and insurance. So, but during the operator will talk to them and they'll tell them, okay, during this 90 days of the initial forbearance, you need to fill out an application if you want to continue it on, because we need to figure out also in that application, how are you going to pay the 30 days, the 60
Right.
days, the 90 days, how many days it is that you're going to miss, how many months, how are you going to do that? So it's some type of workout. Are we going to put it on the back end of the loan? Are we going to modify the term on the loan? Do you anticipate coming into a lump sum of money and you can pay it all off at once, which obviously it's probably not
Yeah.
what people are going to pick. But, in some cases, maybe somebody, oddly enough, has a situation like that. But so they go through that process. They have to be approved for that part of what's next. And then it, moves forward. And once it's approved, then that's how they're going to repay those months that were missed.
Good. I like it. So I think one of the common things I've been hearing from people is forbearance is a good thing, but don't abuse it. If you have to take it, absolutely take it. But if you're taking it just to say, hey, I can take it because I can, not necessarily a good thing for you, right? Would you agree with that?
Correct. It absolutely. It's 100%. If you can make your house payment, it's not going to affect your credit today. But here's the part in the future, what we don't know. I just did a video about this the other day. We don't know how lenders, how necessarily the agencies being Fannie Mae, Freddie Mac, Ginnie Mae, how they're going to look at forbearance. Because I just recently heard from a local credit expert that she was going through she did a video on it. Tiffany did. She did a video on it and was talking about how some folks came in and maybe because it was so new, but they filed for forbearance and it showed up on their credit report, which.
Wow.
So, I don't know how that happened. Maybe it can be removed, but right now, like I said, there's a lot of uncertainty of what the future looks like. So I say it's like almost potentially could be a tattoo on your credit report for years ahead. You go to buy a car, you go to buy another home, refinance. That's the other thing. If you have a modification, we went through that in 2008.
Mm-hmm.
When you had a modification, you definitely had some roadblocks that popped up along the way. So my best advice to people is, if you have to take forbearance, take it. It's your right. Our president said, this is the CARES Act. This is what we're going to do. But if you don't, then don't. But if you do, make sure that you save every piece of documentation, every email, so that when we get you into a new transaction down the road and you're purchasing a home, you have all the records at your fingertips. You didn't throw them away. You didn't, put them in that drawer. You forgot them. Put them into a folder, keep them, on your computer, wherever it might be, so that they're accessible and, we can work through it later on down the road.
Awesome. So the last thing I want to talk to you about is just kind of talking about kind of where we're sitting now and where we're going for the future. You and I talked a little bit before we got on here about the current market. I know for myself personally, what I'm seeing is I've seen a lot of VA buyers and obviously public safety and nurses and doctors. Those people have secured. Those people are still buying. We still have a lot of people out there. A lot of VA buyers right now. I just got beat out with multiple offers on a property for a client. We're still rolling out there. I mean, obviously the inventory is lower. But are you guys still seeing activity still on your side too?
Absolutely. I'm seeing, because we are still in that lower FICO credit score, we're seeing a lot of purchases roll in because, there's just still a lot of shoppers. What do you see? Like, what's changed on your side of the business? Like, how do you show a house now?
So, for the first like 2 weeks, we were kind of like just still because we couldn't do anything. When they made us um, an essential business component, we could actually start showing up properties. But the biggest thing is I've approached it with my listings in a way where waivers are signed, and people that enter the home are required to review virtual tours prior to even verify they even have an interest in the home. And if they do want to view it, they have to. I'm hard on people with pre-approvals prior to entering. I want to make sure that we're dealing with people that have seen a lender, got that component done. They sign the waiver, and if that's the case, then they view properties. And I do the same thing on my side. I give the waiver for my clients when we go in. We wear masks, gloves, and we touch as little bit as we can, and then just enter in and out as quick as we can. It's a weird time. I mean, we do the best we can. Obviously, masks and gloves are the best, are what we're required to do.
Right.
But at this point, I'm very strict on what I do with pre-approvals and entry without waivers also.
Okay. Well, I have the luxury of knowing a couple folks that are high up in the builder world, and the builder world are really good at gauging what the future holds. And one of my dear friends had told me that we're still, even when we get back to work and we get more of a normal, what we're used to, we're going to probably have a new normal, at least for a while, until they get a vaccine. But he said we still have pent up demand. In the builder world, they were looking at building, they needed to build 1 million units, and they're only going to build 500,000 this year. So the thing is that part is slowed down. The building industry is still going. I'm having a home built myself right now, and I'm in the same shoes as the people that are potentially watching this video of, geez, what am I getting myself into? But the thing I have to back off, and I have to look at the facts. And the facts is we still have a shortage in housing in the country.
Yes.
It's bubbles are different. Each market's different, but we have a shortage, and people need to buy homes. People need somewhere to live. They could rent, but rents are going up. I'm sure you have some statistics on that of how much they're going over year.
Yeah, every year they're climbing. So I mean, we're the point where if someone comes to me looking to rent and they're willing to pay $2,300-$400 a month in rent, I'm automatically asking them, well, have you considered the purchase side of things? Because you're right there where your normal mortgage would be on a starter home.
Right.
I mean, some people are still. I mean, there's a lot of people out there that are still terrified of the 2008, 2009 just crash. And a lot of people are still waiting for it to crash again. But I mean, from everything I've read, seen, and watched our economy, we're just not there.
No, so I was part of that 2008. I got into business in 2000, end of 2000, 2001. The difference here is we had toxic loans back then. We had, they call them liar loans. People, no income, no asset, no job. It just, you had a pulse and you got a loan. It literally, you could fog a mirror, you got a loan. And it was, I just remember looking at my boss going, wait, what? 100%, loan with a option arm. Basically it was going negative day one, and it didn't make any sense to me. And as usual, if something doesn't make sense, it probably shouldn't really be in the market. and it, it exploded. The other thing that we had back then that we don't have now is we had a lot of people that were buying rental properties that weren't qualified to manage them. Because you had a very low amount that you had to put down. I think at one point, 5%, you could put 5% down on a rental property, and it could be an option arm. So you could have a interest only payment. There was it was way too enticing for someone that didn't know what they were doing. So they were buying 3 and 4 properties at a time. And when everything, went under, they had no equity. They had no skin in the game. That's the other thing. Right now in the United States, the equity levels that we're seeing in people's homes is the highest it's been in a long time. Mm-hmm. So, it's for someone to walk away from a home right now that's been in it for 5-10 years, it's going to be foolish because they're going to be walking away from a lot of equity. So they're going to do everything they can to make that payment and to stay in that house. So, those are the kind of components that people need to look at. This is so much different. This is a pandemic. This is a global thing. It's all happening at one time, in all states, almost all around the country. I don't think anybody's back to normal yet.
No. Yeah.
So it's completely different. Our unemployment was the lowest it's been forever. Like I said, our equities are up. Interest rates are still very reasonable. I really think the only risk out there right now is how many places are you going to have to do a loan? Because when the refi boom hit earlier in March, right at that point, they were looking at, it was somewhere in the neighborhood. I could be wrong on this number, so don't hate on me if anybody wants to comment. I want to say it was somewhere in the neighborhood of $10 trillion of refinances, people that could refi. And we can't keep up with that as an industry. It's just crazy. Yeah. It would just be 24/7, go, go, go. So what I'm saying is there's a lot of people that can be put in good positions, and they still are. Mm-hmm. And just to go back a little bit, what I was talking about, I was being vague, but drive-by appraisals versus having an appraiser having to go inside. Yeah. Notary signings. I've heard notaries, they're pulling up cars next to each other, and person's putting their driver's license up in the window, showing it to the notary, and then they're passing envelopes back and forth.
Looks good.
With with the documents, so they could get it done, right?
Yeah.
Verification of employment, because you need to verify, and you typically need to call someone and say, hey, does Josh still work there? Yeah, he still works there. Great. Click. Well, those people aren't there to answer the phone, so we're able to use pay stubs. We're able to use bank statements. We've really adjusted to make it happen and keep things moving. Is it moving as fast as it was? No, but it's still moving forward. We're still progressing. We're not at a gridlock. And, I talk to brokers all over the country. I've been talking to some in the Midwest, and they're gangbuster busy. I don't know why, but they are. Yeah. It's kind of weird.
That is weird. Yeah. You know what? Like I'm a positive person no matter what, but I just feel good. Like I feel good about where we're going to come out of this and where it's going. I know it's a hard time for everybody, but I know that once we come out of the other side of this, our economy is going to rebound because we had a solid foundation prior to this.
Absolutely.
And we are gonna skyrocket, and this country is amazing. We're gonna do awesome. So, I really appreciate you, man, for sharing some of your wisdom with me today. And you guys, if you have any questions, feel free to reach out to Rocco. If you need his information, let me know. He's a wealth of knowledge, you guys. So, I appreciate you, buddy. Thank you.
Yeah, no problem. Thank you.
All right, buddy. Take care. I'll talk to you soon.
All right. Be safe.
Yeah. You too.
Thanks.